Hi, this is Mike with PriceActionTradingSystem.com, and will be our chart lesson for Friday, May the 4th. And it was a fairly easy day today. The trend was down for the most part from the open. Um, we did go into a late afternoon, that Friday afternoon doldrums where prices just kind of range around, but there were still a few entries there if you were still trading, and but there was plenty of chance early on to make some good money, and hopefully you made yourself some and had a good trading day. But I did get several emails from people telling me how they had a good day and how they thought it was an easy day, and that's because the market trended well and there weren't a lot of reversals. And if you got on with a trend and stayed with it, you did pretty well. And hopefully that was the case for you. And but if not, we've always got next week to start again. So this was kind of the big picture. Always back out just so you can see the big picture. Here's the close of the yesterday. I'm actually doing this Saturday morning. I didn't have time to do it yesterday. Here was the open from Thursday at 3:30 or whatever. So, and a lot of times people ask me about my charts. I do use the extended trading hours charts because that information, even though it gets a little out of whack, it is important information. So I use that, and I use that in my trading, and I think it's important. So um, I encourage you to do the same thing. But sorry, I'm going to excuse me one second. Sorry, I had an interruption there. Where were we? But yeah, I do use the extended hour chart. So in case you're wondering, I think it's important. I usually find my original trend lines off of that. I didn't find that today. Let me back out and tell you how we were really in this trading range from the overnight um, for most of the night, and this is where the trend we finally broke lower right here, and this turned into a breakout pullback short, and this is where the trend really started, right in here, the downtrend. And you could have got a trend line right here, and you would have had a two-legged correction here, and then another leg that's of similar size. But I believe this was the proper trend line right here. We had a break right here, a couple of legs down to a new low, and then we went into this extended trading range, and that's kind of what you expect. You either expect the market to correct for a little while, or you expect it to reverse. And all we did really today was correct, but I think most of the traders were done. You can see from 11 o'clock to the close around 3:15, just not a lot of volume, not much happening. So um, I think most of the selling was over by that time, and there wasn't anybody willing to buy, and most of the traders had probably made their money and started their weekend. But let's go into the trades. Um, the very first trade of the day was, let me back out a little bit more, just so it's easier to see. And you can see we had the trend line coming down through here. Here was the 8:30 open right in here, and you actually could have entered this trade. I didn't mark this one because it was really iffy. This was basically a trading range, and we did have the trend line coming already, but I wasn't sure that was it. This was a strong support area, so going short there was risky, so I didn't mark it. If you took it, it's a valid breakout pullback short. It's not a strong one, but it's still a breakout pullback short. But the entry of the day was right here, and you can see this. This is just a bigger version. This is more of the right way you want the breakout pullback short to look. We actually broke. We actually had some distance below the support area, and then prices pulled back. And this is a two-legged pullback to the EMA, the trend line, the breakout area. So if you draw this down here where most of the closes were, you see it's a perfect retest. And so this was the best setup of the day. And you got a nice little doji bearish looking bar right there. You got your two-legged pullback. I mean, this is the classic setup that we look for. You go short right there, and if you held any runners, you were short all day long because your runners were safe, and you could have made yourself, depending on where you exited. I would have been looking to exit right in here, or did look to exit right in here, because we already had these two measure legs down. And so I exited right in here somewhere. I don't remember exactly where, but 66 to 77 or so. So a good 10 points plus right there. One trade like that, just a single contract, will make you some pretty good money. And if you got multiple contracts, you're really making some pretty good money there. And somebody else asked too, and I'll be honest with you, I make most of my money just scalping out. But I like to hold those runners because when you catch one like this, and we've caught several lately that have been really good like this, the market's starting to move a little bit. And I mean, we were in this trading range type deal for the longest, and it was just so hard to trade that and so boring for most people that it was difficult. But things are moving again, and so it's been kind of nice. And when it does, you want to be holding on to these runners because it's just easy money. And again, I do make most of my money scalping out with most of my contracts, and then but I always try to hold a runner or two if prices are trending. And sometimes they get stopped out at break even, and sometimes they don't. And what I do with my runners is I just, once I scalp out and get most of my money, I move my stop to break even, and then I manage the rest of that trade like a swing trade. And you generally want to keep your stops above the last swing, and if prices take that last swing out, um, then it's time to exit. Like we finally had a swing, a couple of swings taken out right here, and that's where I got stopped out. And as we got down here, though, I started tightening things pretty close because you had your break of the trend line, and you clearly had at least two legs down. Um, you never know if those two legs are going to be a single leg and you're going to get two more, but that's pretty obvious. You got a couple of legs right here down, and so then I'm looking to exit. And prices did go a little bit lower, so I gave up a little money, but sometimes you get out right at the low by managing your trade that way. So anyway, that's a classic setup. Hopefully you saw that right there. The trend line was pretty obvious if you even tried to draw it. And this is just a channel. And if you copy that line and move it down, look at there. And you can see the channel starting to wane right here because we're coming back more and more, and we're not quite getting there. And so that's a good clue too that you're going to get a break pretty soon. And you got a little bit of a break here, and you got a bigger break here. And so that's, remember to always try to draw your channel lines too. So, but your next trade was here. This is just a breakout pullback from this area right in here. And you can see we tested it once, came back and tested it again. And so going short right here was okay. It was, if you waited for this one, it was really too late. This one does have a little bit of a green body, but it's a doji, and it is a breakout pullback short. So going short right there was okay. There was room to get out before you got down to here. But if you waited till here, it was a little iffy. And if you did enter here, you probably got scared because this bar, you know, it looked like prices were going to reverse and make another leg up. And so that's, and this was only a first entry long, but there was a failed move in here. You tried to go up once, tried to go up twice, and then so you got a little two-legged move here, so we needed a bigger correction. So it was a little risky on this trade, but the trend was down, and this was a pullback to the EMA and the trend line and what was a pretty good downtrend. So if you took that, nothing wrong with that. This is another breakout pullback short right here, and you can see those lows across there, and it really was more back up there, and this was just a better pullback to retest this breakout area in here, even if you had it right there. And you can see that, and that's just a breakout pullback short, and going short right here or right here, and it was off to the races again. And it was pretty obvious this was a trend line by this time. And let me show you this right here. A lot of people, this is why I'm always saying wait on a second entry, or at least wait on a trend bar in your direction, because look at this one. You got this bar here, and see, this has got more than a tick in it. This kind of looks like a doji, but it's more bullish than it is bearish. So if you went short right there, you just got trapped before the second leg created. So this is the kind of stuff to watch for. If you'd have waited on the bearish bar right here, it never got triggered, and you wouldn't have got stuck in a bad trade right there. So don't be antsy to enter. What happens is people watch these moves all down through here, and every one of them work, and they finally say, well, next one, I'm taking it. And they go short right here, and what happens? They get trapped, then they get stopped out, and then it goes exactly where they thought it was going to go anyway. And hopefully you can see this right here. This is just a two-legged correction, a measured move. There's leg. Let me get this. There's leg one, and then there's leg two, and it's almost a perfect move. So, and you got a little doji right there, and then you got a bearish bar right there. So either one of them was good, and it was off to the races again to the downside. This one here is just another breakout pullback short type entry. You can see there we broke lower, pulled back. So it's another breakout pullback short. And you could have entered here too, same thing, but this was really, really risky because we had the trend line break. We made a new low. The retest was in there. So I didn't like this setup as much, but if you took it, it was a good trade, and prices continued lower. And there were even some setups right in here. This was a failed second entry long right here. You see, there's your first entry, pull back, second entry. So this was a trap, and it was just enough to get your scalp, but it's just getting risky trying to go short right in here. So I didn't mark those. I wouldn't have taken them, and I wasn't trading by this time. I was just managing my last of my runners at this point, so I wasn't entering any new trades. But I don't think I would have taken those two trades. It's just too risky. Now this is a different story. You got double top, triple top. You got a nice bearish bar. You got plenty of room to scalp out. This is a two-legged pullback that retested this. So a double top in a downtrend is a great setup, and it's usually always good for at least a scalp. And if you took this one, it was good for a couple of points. It was good for a lot more than a scalp. And there was another one right here. It's just another test of that. You got a doji up here. So going short right there was okay. You also got this little congestion right here, and you got this little break higher. So that's a failed breakout up there. And plus you've already got resistance. And it's a double, it's a broader double or triple top in a downtrend, and that's a good place to enter. That's what we're looking for. And it took a few minutes for this one to work lower, but it did. And you actually could have taken this bounce right here. This is rejection. This looks really like rejection here, and it took it a minute to get going. But after this trend line break and all this overlap, if you did go long right here, this was okay. Odds were we were going to bounce off of this double top. When that broke lower and turned and closed on its high, that's a good sign. And all this little pullback was a chance to scare these people that were buying in here out and maybe trap in some more shorts, and that gave it enough momentum to push it on up here, back up, and try to test these highs again. And but that's all there was for the day. There actually was another two-legged pullback to the EMA here, but this is 2:30 in the afternoon on a Friday. Not a good place to be entering. And you can see it didn't go very far. It did come back up and test this high again, and that would have been a great place to go short if there was still plenty of time. And you could see what a good move it was. But there just wasn't, this is late in the day and crazy things can happen. So I just don't recommend entering there, and I usually don't mark any trades that time of day either. So, but all shorts today, there was no reason to be. I mean, there were opportunities to go long with little setups, but it's just not wise to go long on a day like this. Everything's downhill. Every pullback to a major resistance or a breakout area, it was a perfect chance to go short, and they all pretty much worked. There weren't many failures. So that's the kind of trading we're looking for, and we love days like this. I mean, I hate that the market's selling off, but to be honest, as a day trader, I don't care where it goes. I just want it to move like this so I can make money. And I do care about the market overall because I've got other investments that probably are getting dinged in these sell-offs. But I make most of my money day trading, and that's why I decided I wanted to be a day trader so that I don't have to be emotionally tied to the market all the time. Once the market closes, I've got no skin in the game, and I sleep good at night, and I like it that way. So hopefully that makes sense to you. But when you're in the market full time, you go into a weekend, something crazy happens over the weekend, you don't know what's going to happen when you wake up Monday. But I don't, at this point, once I close my trades for the day, I don't, I care what happens Monday, but good or bad, I'm not going to be affected. And if it's good, I'll just get in there and go with it. If it's bad, I'll get in there and go with it. But I don't get burned by being in there overnight. And so that's the advantage of being a day trader, in my personal opinion. So when I used to trade, before I became a day trader, I was what I would call a professional investor. I was always in the market. But man, it was stressful at times because crazy things would happen. And when for any of y'all that were on stocks during 9/11, If you weren't worried about your stocks and your money and your savings at that point, if you had a good bit in it like I did, then I don't know how you couldn't, but it scared me to death, and it was pretty painful for a few days there. And I don't ever want to live through that again, and so that's why I became a day trader. But anyway, that's enough for today. This is Matt with PriceActionTradingSystem.com, and we'll see you next week.